Time now for the markets with Leighton. And Leighton, the monthly cattle on feed report is out.
That's right. We'll be talking about why it sparked a bullish reaction early in the week. Also ahead, harvest puts pressure on soybean prices. Cheaper pork may be in the future, and saw timber prices are forecast to weaken next year. At least one analyst is saying he wouldn't be selling soybeans off the combine right now. And Darren Newsom, DTN senior market trader, adds that he feels beans are going to continue to struggle.
And the stronger dollar makes it less attractive globally to buy U.S. supplies. And when we're only one half the equation and there's plenty of supplies still in South America, that's going to make the situation that much more difficult, and soybeans are going to have to rely more on corn's ability to come back with a rally for itself to be able to rally. I still don't want to sell beans off the combine. Basis is still, relatively firm. If you need to generate some cash, do it. I think there's going to be better opportunities later on, if nothing else, tied to the price relationship between corn and soybeans.
Cotton futures traded higher Thursday morning after USDA reported larger than generally expected U.S. weekly export sales. However, broker Nolan Cullen with Walsh Trading in Jackson says this market is not as bullish as it was. In an interview Tuesday over the internet, he also explained the market's bullish reaction to that September 23rd cattle on feed report. But first, we talked about cotton. Nolan, are the fundamentals of the cotton market as strong as they have been?
Well, Leighton, I think the fundamentals are shifting somewhat. Of course, during the 11 crop year, we had a major bullish move, record high prices. That's changing this year. We are seeing a larger world carryout as well as a larger domestic carryout, primarily attributable to larger foreign production. So I think the fundamentals are more imbalanced, not as bullish as last year. The technical suggests we'll probably trade between a range of 95 and 100 on the downside, and potentially up to 110 to 115 between now and year end and get through harvest. I think the fundamentals of cotton are still well supported in the future, but we would recommend marketing take place on any rallies up near the 110 level, basis December cotton, as we move into harvest.
All right, you call last Friday's cattle on feed report the real shocker of the week as far as the markets. Explain that.
Well, we would call that report shocker because the estimates of on feed and placements were below the range of guesses. Normally, the range of guesses by the private sources are pretty accurate, but the government came in and reduced on feed by over 2%, below the range of guesses, and placements were only 99% when the expectation was 107. So this catalyzed a bullish reaction early Monday and into the recording of today on Tuesday. That in fact the tightness in cattle numbers for the next 12 months is beginning and is upon us, as opposed to earlier expectations that this might not be upon us until the first of the year. So the cattle market's reaction is very bullish. If the economy can hold together and European debt worries go to the side, we think the outlook for higher cattle prices into 12 remain very strong.
And any comments on how the calf market may be looking in regard to this when we look at the cattle on feed report?
Well, obviously we're probably from 3 weeks ago, we're in obviously a very positive situation relative to grain cost. We've seen over a 20% correction in the grains, and now we have approximately 20% rally in cattle. Those will be optimum situations for being long corn, short production, live cattle, or feeders into the spring months.
According to new data tracked by DTN, retail fertilizer prices continue to show little movement. Through the third week of September, DTN describes what it calls a pause in price hikes and says this has been the situation now for over a month. While all 8 of the major fertilizers were slightly higher compared to the third week of August, only one rose by any significance. Urea was reported to be up 5% from a month ago, this again according to DTN. Well, here's a quick look at our trivia quiz for this week. See if you know the answer. Where does Mississippi rank nationally in terms of honey production? Are we 28th, 36th, 44th, or 50th? I'll share the correct choice just a bit later. Turning now to the hog sector of the markets, analyst Walt Hackney is anticipating that a lot more hogs are going to be sold in this country in the next few weeks. He told Market to Market's Mark Pearson recently that the product market may indeed roll over and take a dip as a result.
I think that we're potentially looking at 2.4, maybe even 5 million hogs coming within the next month on a weekly basis. The large hog operations, Mark, are loaded up with hogs. Very few people will be willing to admit that at this point in time, but they are. And they're going to have to start liquidating hogs, and they'll be selling heavier hogs regardless of the gain of cost and so forth.
Closing out the markets now with some forestry products news. Sawtimber prices in the South are expected to weaken 2.7% in 2012. Key factors, according to Random Lengths Woodwire, include weak housing expectations for housing starts, as well as low utilization rates at the sawmills. Now, looking out into 2013, the same report says sawtimber prices should strengthen that year some 2.9%. The trivia answer is the last stop of this segment, so let's take a look. The Extension Service website, msucares.com, says Mississippi is number 28 nationally as far as honey production. A is the correct answer.